Hey, good afternoon, traders. This is Trader Tim from over at eminimine.com. It's Monday, March 16th, 2020, and I wanted to do kind of a market recap here, trying to remain sensitive to the health crisis that's going on. I chose not to do a video last week, just with everything that's going on. Didn't feel like it was appropriate to talk about making money and some of the financials in times where people are going through hardship and some people are losing lives and some people are potentially losing their jobs or at least cutting back on their hours and having some hard times. So, but I did want to the talk about the markets. One of the great things about being a trader is that you always have quite a bit of cash. If you're swing trading, you get in a position, you close out of the position, and you're back in cash. If you're day trading, and you need quite a bit of cash to swing trade stocks. If you're day trading, you may not have as much cash just because of the margin requirements, but you're in a position, you're flat at the end of the day, and then you're back in cash. So it does make it yes, you're not 100% invested in a strong bull run, but when the market does turn down, it does put you in a very good position to uh, at least have access to cash and insurance and position yourself to if you have longer term accounts that you want to dollar cost average in, you can do those kind of things because you have the cash. And let's not forget that last year, I mean, the gains, even in the in your, you might have a 401k or a retirement account, were pretty substantial. And even the starting this year, with trades like Microsoft and Tesla, I'm still in the BNFT short. That at this point looks like it might go to zero. But there have been opportunities to have good trades, and then you can take that cash and you know utilize it or have it to put towards other things when you get these kind of um, market cycles happening. And to try and keep things positive here, you know go back and try to find time in the markets where we did not return to new highs. I realize this is a very sensitive situation and serious health crisis, but just taking a moment to um, pause and remember that we will get through this crisis, and we will get through the next crisis, and the market will recover. It may not be next month or even next year, but 5 years from now, 10 years from now, the stock market, the real estate market, the economy, I mean, it does grow over time. But being in the context that we are traders, how can we capitalize on some of these downside moves to be able to either hedge our longer term positions? As most of you know, I have bought some on this move down at a pretty standard 10% correction, and then the 20% level, and then now I think I saw we were almost 30% off of highs. Um, so I have done a little bit of adding to my longer term account, but again, keeping those separate from my day trading account, it has a separate purpose. Its purpose is to just be there collecting dividends, reinvest, dollar cost average. It's gonna just kind of do its thing and grow over time. And then from a day trading and a swing trading perspective, those monies are more taking advantage of the actual directional market moves, whether it be a pullback like this or um, just leveraging individual stocks when the market is on a tear. So let's talk a little bit about some ways that I have been able to have some pretty decent trades over the last couple of weeks. Um, so last week I chose to not take any specific day trades, but really look towards swing trading. And the reason being that when the market is in such a high volatility environment, we complete these moves in only a matter of days. So, going back to essentially the first halfway back short of the move down at the beginning of the month, I mean, we rallied to the 50%, and in 4 days, we were already at the negative 23% target. So it's not that there's no day trading opportunities. It's just, and it's not that even that, there's plenty of movement where you could take a trade on a 512 tick chart and have it move 10 points in less than a minute in some cases. But in order to capitalize on the move and be able to stay in the move, you really have to adjust your targets and adjust the stop size. When the volatility is down in the 30s, you can still get away with a very tight stop. In this type of environment, yeah, there's some cases where the market's moving what I would call fairly technically, but moving to something like the micro ES is a good option. Again, we're focused on managing risk and taking assessing the risk on the trade first, and then looking towards where might the trade go for gain. From an option side, putting on puts, unless you're getting in when the volatility is low, which can be in some cases at the end of a strong rally day, but the value of the puts you're going to be paying a lot more for options at this time with the volatility high. So looking at something like the micro ES might be or is, in my opinion, is the better way to go. It is futures expiration on Friday, options and futures expiration, actually a quadruple witching. And there is no Fed meeting this week. They canceled the meeting, did their stuff on Sunday. So we're just going to have our regular Tuesday live trading session tomorrow and go from there. So I do want to talk about a trade from today. So just because you might be swing trading, quote unquote, versus day trading doesn't mean that you don't look at the intraday charts. So I bumped my chart up from a 5-minute to a 15-minute. And one thing I've been noticing over the last 2 weeks is that the prior afternoon's high to low to the, let me rephrase that, the afternoon swing high or swing low from the prior day to today's swing low or swing high has been seeing support and resistance. So in this case, Friday's high, afternoon high to today's low at the open is set up in a short, and we saw resistance there, and that kind of a setup has been presenting itself a lot over these last 2 weeks. So rather than try and trade all throughout the day, just looking at those bigger levels for an opportunity to place a trade, and then using the 61.8 as essentially your stop point, if you will, and then moving to the micro ES to reduce some of that risk, to keep your position size smaller. And so identifying the support or resistance on the larger time frame, so in this case the 15-minute, and then coming over to the 512, drawing up a setup which is going to be pretty big still, even though it's the 512 because the volatility is higher, but then taking that trade and then using the larger 15-minute time frame as your target, using that negative 23% as your target. So yes, you're holding a futures contract overnight, but if you're using the micro and the trade has kind of moved away from your entry, I feel like you've been able to at least cut down some of the risk on the position. You could close out, if you do 2 micro contracts, maybe you close one out at the end of the day just to cut down on some of that overnight risk. But by and large, that's been what's working for me over the last 2 weeks. We had that first halfway back short on, way up here, and that one traded to its negative 23% target. The next one didn't really make it all the way up there on the ES. If I let's see here, go to the daily chart. From the high down to the low at the negative 23% target, we didn't quite make it up to that 50%. But then these next ones and these over the last couple days, they've really only been like 2 or 3 day, a 1 day bounce, and then in the case of the last couple days, we bounced 1 day and then gap down today, basically right to the negative 23% target. So there have been, there has been some what I would call technical moves in the market here, and trying again to be sensitive to what's going on with the health crisis. But it there if you can reduce your risk, not overtrade, and kind of step back a little bit and try and think clearly, that there can be some decent moves that you are able to capitalize on and protect some of your risk, if you're hedging some longer term, buy and hold dollar cost average kind of a position, or just if you're all entirely in cash, being able to still trade your way through a highly volatile market without having to take a dozen day trades to do so. So tomorrow we'll be doing the live trading session. I am still planning to do the swing trading masterclass at the start of April that I've been working on for the last month or so, and we've been talking about. But again, just trying to be sensitive, and there's a lot of people out there that are probably struggling, and the loss of life is never good. So stay safe out there, everyone. Manage your risk, and hope to talk to everyone again very soon.